All right, what is up, traders? What's up, tycoons? In today's video, we are going to break down the treasury market. You can see TNX got its ways for a pullback, but we're still bouncing here in this bullish structure we've been trading in. We're looking to see if we can break through, potentially get that gap fill around 4.4. We'll zoom out on TLT just so you guys can see the overall bigger picture we had on the weekly time frame, and then we'll zoom in a little bit and go over some of the key levels. Remember, I was really thinking that TLT would be trading in a range and that ultimately we would get range bound. We did break above that 89.21 level, which is where I think that the top of the range was. But we're back below there again, pre-market. Now there's two gaps down to fill, two gaps up to fill. We're basically trading right in between those. We'll see which gaps end up filling first. But the key thing to remember is that these gaps do fill about 90% of the time. We'll break down some of the signals, such as bullish divergence, different things like that you guys want to pay attention to in the future. All right, but there's also lots of important data I want to go over with you guys. So we're going to get into that data, break down what's really going on in the economy real quick before we get into all of the charts and technical analysis. So be sure to smash the like button, subscribe to the channel if you guys are new. I started a completely free newsletter, Investment Intelligence, for you guys, giving out free finance content, as well as I try to sprinkle in like one or two free trade ideas a week for you guys. All right. Highlighting the conditions, showing the chart, and these trades, a lot of these trades have worked out very, very well, and this was a trade on the home builders over 2 months ago, a very interest rate sensitive, sector, highlighting the chart and going over the conditions on many different home builder stocks. And you can see, this one right here is SWK, okay, Stanley Black & Decker, highlighting the rising wedge, giving out the price targets where we're looking for it can go. All right, that trade played out very nice as well. So, if you're a fan of free valuable content and you like free trade ideas, you want to get those sent straight to your inbox, sign up for that newsletter. All right, the link is in the description below. You can join the Investment Intelligence Discord where you can get access to all of my different analysis rather than just, a couple a week from the free newsletter. If you want to join the Discord, there's a link in the description for that. It's less than a cup of coffee a week. It's just a couple bucks, right? Now, the first thing we'll talk about is CPI, okay? And CPI is trending in the right direction. This is why we saw such an amazing rally yesterday after that most recent CPI. So we have month over month. Okay, on the top, we have our month over month CPI, and then we have our year over year. So the month over month is the one that the consumer feels the most, all right, versus, a year over year, because in retrospect, consumers are basically looking and saying, well, prices haven't gone down in the past year. And that's a big misconception that people have about inflation. When inflation comes down, it doesn't mean that things are getting cheaper. It really just means that things are not increasing in price as fast as they used to, right? And so the month over month is the one where people really experience that the most. And there's a big change, whether it's up or down month over month, that's typically where, the retail and consumer is going to feel it the most. Now, this is basically, the inflation report. Okay. And things look good. Okay, things look pretty good here. And that's a good thing for us. All right, if you look at medical care, that's basically one of the areas where it's ticking up, where we saw one of the largest increases, that in transportation. But other than that, gasoline, all right, and fuel, energy prices, that went down a lot. Okay. And for about 30 to 40 days, gasoline prices went down, all right, consecutively. And so as a result of that, transportation usually is going to end up basically energy will flow into everything else, okay, because the cost of production, the cost of transportation, the cost of everything revolves around energy. So if energy can come down, it really does have a big impact on inflation. And so it was really good to see energy coming down. All right, we know that the Fed likes to look at core and take out food and energy, but I mean, food and energy is very important. Okay, those are the two things that we really can't live without. So, we do need to pay attention to those actually, and those are very important to the consumer. Now, only a quarter of Americans think Biden has helped the economy. Okay, and so we've got Republicans in red here, Democrats in blue overall. All right. And you can see here it says hurt a lot, hurt somewhat, mixed, no impact, help somewhat, helped a lot. And I mean, less than 20% of both of these, right? And if you take a look at the average, it's terrible, right? I mean, only a quarter of Americans think Biden has helped the economy. Doesn't matter which side of the, which party you're on. And a majority of Americans say they are worse off financially under Biden. So, Bidenomics, I mean, you take a look at this, okay, and we have much better off right here. So these are people, would they say that they're much better off? No, right? I mean, it is extremely low right here. And most Americans, as this is saying, are basically telling people that they are worse off financially under Biden. Now, this is from the Financial Times. This is a survey they did recently. Sorry, I had to sneeze real quick. And so when they were asked what was the source of their biggest financial stress, 82% of respondents said price increases. So it's really just all inflation. Three-quarters of the respondents said rising prices pose the most significant threat to the U.S. economy in the next 6 months. And that's one of the main things that, the average person is concerned about, right? Every group, Democrats, Republicans, and independents, they all list rising prices as by far the biggest economic threat and the biggest source of financial stress. That is bad news for Biden, and the more so considering how little he can do to reverse the perception of prices before Election Day. So, I mean, if you're going by something like this and from a financial standpoint and an economic standpoint, it doesn't really look too good for Biden reelection, in this upcoming, election cycle. So, I mean, we'll see if that actually matters or not. Oftentimes, people vote for other things, all right, than necessarily the economy. I mean, but when you look at this data, people are not a fan of Bidenomics, and they don't really feel much better off, and they actually feel worse off under Biden here currently. Now, generative AI is already taking white collar jobs and wages in the online and freelancing world. So if you look at the percentage change in monthly freelance jobs, this is before ChatGPT. You can see it already was kind of in a downtrend here. But once ChatGPT launched, all right, it is just an absolute plummet, right? I mean, absolute plummet here. And this is earnings, not stock earnings, but rather wages and earnings, okay, from these freelancers. And you can see that that is also just decreasing here dramatically as well. And a lot of people use freelancers. There's a lot of freelance writers, okay. A lot of even people use freelancers for things like YouTube, right? And say, hey, well, here's a topic, write me a script, here's some data, write me a script. And now people can just simply use ChatGPT to do a lot of things, right? That was just kind of one example of writing. Now, it's not going to replace, your great authors, okay? That's not what I'm saying here, but more just some of that freelancing stuff, and it's going to spill over into more areas, right? And it's going to start to affect more of these white collar jobs. And you're going to continue seeing this happen where AI is going to be, replacing a lot of the work that certain people do. Okay, one thing that I think is in the financial area, I mean, once they get a really good finance GPT going, that thing will do your taxes for you, right? And so, TurboTax is very common. Let's just say, TurboTax says, hey, we'll let our new AI do your taxes for you, using the TurboTax GPT, for instance, right? And so you would see a lot of white collar jobs such as, accountants and tax accountants and, things like that. They won't be replaced altogether, but you will see, basically less demand for those as people transition into more and more AI. Now, we talked about politics a little bit. Profits matter more than politics. So if you look at the percentage of years from 1928 to 2022, where total returns were positive based on political party versus the S&P 500 profit cycle, it's really all about earnings, okay? It's really what matters. Republicans, it's positive about 43% of the time, Democrats 57% of the time. I mean, there's a slight difference there, okay, but it's 7% away on both ends from being 50-50. But really positive earnings per share growth is the ultimate driver, right? So it doesn't really matter if it's a Republican or a Democrat in the office. It's really more about earnings per share, right? And so when you have negative earnings per share growth, right, you're only profitable in the S&P 500 about 33% of the time, versus you get that positive earnings per share growth and you're up about 67% of the time. So that's just some of the data I wanted to share with you guys. We'll go into TNX right now. TNX has really honestly been following the structure very, very well. Okay, we came up and we hit our initial targets for wave 5 of 3, right? So that's what this Roman numeral 5 is of 3. We had 1, 2, 3, 4 targets here. We hit the first 2. All right, we can't predict where, things are going to top out at or bottom at, but we did come to the top of this channel here. All right, after hitting our wave 2 or wave 5 of 3 targets, and we started the pullback, right? And we initially had a gap right here. What's crazy is that we actually gapped below the gap, right? So we completely just skipped over the gap altogether. Once we hit this target up here, we were mentioning, hey, we could come down to this gap and potentially down to 4.4 to fill this gap down below. But overall, you can see here we're starting to bounce a little bit at the bottom of this channel, right? It's been a very, very bullish structure. And the trend is your friend until the trend is broken, right? So you can see we bounced here 1, 2, 3, and now 4 times. The big question is, do we break below, right? Do we actually break below, and do we start to try to reverse this uptrend, this very strong uptrend that we've seen since March, essentially, in Treasury yields, right? If we do so, right, 4.128, that's where I think that the 10-year Treasury can go down to, okay? And this will be a key area in my opinion, right, for 2 factors, right? And we'll kind of just go over some of these scenarios. If we come down here, it's very possible that we get a bounce, and we would look for a typical, bounce, break, retest, right? A break of structure, right, a retest of that, and then a continuation of the trend for confirmation. Okay. But if we end up doing something like this, where we break below and we get around this area, maybe a little above, maybe a little bit below, and we actually start trading back within this range, what that's going to turn into is a look below and fail, right? So, buyers looked below, or sellers looked below and failed, and price action actually continued back up higher. Okay. And the reason that this is going to be bearish and pretty important for things like TLT is because as as the treasury yields are going up, it's going to result in bonds going lower, and this opportunity right here is really the chance for sellers to come in and drive treasury yields lower, right? And drive lower, get that breakout, retest, and then continuation lower. If they fail to do so, right, it lets you know that, hey, the sellers weren't in control. This was a fake breakdown to the downside, and actually bulls are in control on the treasury yields and going to continue driving treasury yields up higher. So you do want to be pretty cautious of that. And that's one thing that I would pay attention to when it comes to the treasury yields right now. If we were to take a look at TLT on the weekly time frame, we basically did complete our 5-wave structure, to the downside, right? We had the initial wave 1 down, and this has been a 3-year bear market we've seen in TLT. Now, this wave 3 here, where we came down to around the 91 level, was very confusing to a lot of people. Okay, we basically had 6, 7, 8 months of chop here, and it was a little bit tough to decipher because of the structure on the smaller time frames. But when I zoomed back out, it was a little bit more clear, and we got an A, B, C, D, E wave 4, right? We had a triangle pattern wave 4 with an A, B, C, D, E structure. We broke down from there, and we ended up getting 5 waves to the downside, right? 1, 2, and then we had 3, 4, 5. So we were looking to see if TLT was potentially going to extend lower and come down to the 82 to $80 region. Sorry, that's the opening bell going off right there. But that didn't happen, right? And we didn't get that. We didn't come down, that low. And it seems like we ended up coming in here and putting in a nice bottom, right? Now, whether or not that this is a long-term bottom, this is a nice rounded bottom right here. We like rounded bottoms. I don't know about you, but that's something that I like to see. And as I mentioned before, we have 2 gaps up, right? We have one here, we have one here, we have one here, and we have one here, right? So we're basically trading right in the middle of two gaps. Pre-market, it was dipping down below this 89.21 level. And I think, ultimately below 89.21, I think we're just going to consolidate and try to figure things out, right? And we couldn't bounce between 89 and 82, and just stay range bound a little bit, right? And there's three stages to a reversal, right? You have your downtrend, and then you have box consolidation, okay? And then you have the actual reversal itself. So above 89.21, if we can hold above 89.21, I'm more bullish and open to the thought of getting that larger reversal from the very large downtrend that we have. But on a shorter term basis, we've already started to reverse. We came above the recent lower high right here, and now we're starting to put in a high, and we're starting to put in higher highs. We're putting a low, we're putting in higher lows. So if we can keep this shorter term uptrend going, that's when we have a stronger possibility of holding above that 89.21 level, and ultimately looking to see if we can get that larger reversal from the much larger downtrend for that third stage of the reversal, which would be the reversal itself after this little bit of box consolidation. The big thing to me is, are we still stuck in this box consolidation? If we were to draw it just a little bit more broadly right here, okay, right around 90, maybe the range is $90 down to like 80 or whatever. Maybe that's really the true range. Maybe this 89.21 level is a little bit off, but ultimately I like the levels that I have. And if we stay above 89.21, I'm more bullish. Okay, and below there, I don't think TLT necessarily has to go to all-time lows or anything, but I do think it's going to be much more range bound and stuck range bound until we get much more clarity, right? I mean, pretty much it's clear that the Fed is pausing rates, but once we get more clarity on when they're going to potentially start cutting rates, that's when you'll really start to see treasury yields, in my opinion, start to fall a lot more. Okay, so that's pretty much it for today's video. Smash that like button, subscribe to the channel. If you enjoyed the analysis in today's video and you feel like you need that one-on-one personal interaction to learn a little bit more, I do coaching sessions all the time. I have 30-minute sessions and 1-hour sessions. You can book those directly on my Ko-Fi page, clicking on the commissions tab here. You can also request a YouTube video on a specific topic of your choice, or you can click on this buy a coffee button, basically as a way to leave a tip or donation for the free content I do put out for you guys. Don't forget to sign up for that investment intelligence newsletter. All right. Free trade ideas, free valuable content sent straight directly to your inbox. All right. And if you want access to all of the different charts that I'm looking at, different trade ideas, plays that I'm watching, you can join the investment intelligence Discord as well using the link in the description down below. We're having an amazing week so far, and we'll look to see if we can continue that with many winners,